All right. Hey guys, Brad here at Elliott Wave Made Simple. Today we're going to take a look at silver and oil. Both instruments I view as looking for a bottom, and I think one is closer to potential bottom than the other. All right, let's dive into the charts. First thing we're going to take a look at is crude oil. I've zoomed out a bit looking at the 6 hour chart, and you can see I've got some levels on my 6 hour chart. These levels are from the past. This deep support down here has a couple of wicks below it. This zone right in here, call it 66 to 64, is also an interesting zone. Historically, prices interacted with the zone many times. The way I view it is that there's a lot of daylight in this empty space right here, which is why I have that arrow on there on my daily chart. I've zoomed down a little bit. This to me was an important level. I was looking higher, but with this 71.46 level getting broken really changed my perspective. And then what we had is what looks like a back test of that level, which, if you ever need confirmation for a level as having been important, a back test is a good tell. So in this case, you broke that level, came all the way down, poked below, just ever so slightly below this next level down, and then ripped back up and back tested 71.46 almost to the penny, and then let go. And then now we are back again below this level. So in my mind, just looking at this 4 hour chart and looking at these levels taken from the higher time frame, it seems to me that now that we're below here, I mean, can it rattle around? Yeah, of course. I'm not going to be surprised at all to see it come down and get into this zone where I will be scalping to the long side, because it is certainly most likely going to bounce from this level. That's just the way I view it. You've got a lot of history about this zone. Bounce here. You could call this a back test if you like. Of course, here it shattered it. But you can see how price has been in this zone and interacting with this zone, especially here. Bounce, came down again, bounce, came down again, bounce, 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 multiple times from that same zone. So call it 66 to 64. All right, so now what we're going to do is hop on down to a much, much lower time frame on oil. And just to get your bearing straight, all of this action right here is really happening right in this area. Okay, let's call it the ceiling over here and the floor right here. Here was 71.46, which we got below, obviously, came down, even poked 50 cents, well, really $1 below it. So in Elliott wave terms, the way I've put these fibs on here, and those of you who are learning Elliott wave from watching me, I'm just going to tell you, you grab the fib tool, the one that is trend-based fib extension. It's really the extension that we're after. So I'm counting this as a wave 1. So I put the first click at the bottom of this low from Wednesday, as in 1 week ago today, this Wednesday low, because maybe, look, I want to clarify something, because I know a lot of folks message me, hey, my chart is not the same as yours. The levels aren't the same, even though I'm looking at the right date. It could be a contract expiration issue. Okay, got to be on the same contract. It could be an instrument issue. Maybe you're trading CFDs, or depending on your broker, the price can be different. So you got contract expiration is one thing. Are you on a CFD, on a Forex basically version of oil, or are you on a futures version? And then again, your broker is going to have different levels as well. So here's the key point, though. It's the structure of price is really what is happening here. Whether you're in the club with Armando, by the way, Armando's club, the link is in the description of this video. Highly recommended. But Armando is all about the structure. Elliott Wave is all about the structure as well. So you can trade, doesn't matter what instrument it is, trade the structure of the instrument. So what I recommend you do, let's go back to the chart. This low is from the morning of Wednesday, the 28th. That's where the first click goes. The low of oil on the morning of the 28th, Wednesday, August 28th. The high, click the second click of your fib tool because you get 3 clicks. The second click is going to be the high from Thursday morning around 10 a.m. That's your second. Excuse me. I'm sorry. I'm confusing things here. The first click goes at the previous swing high. So sorry. Monday morning, 10 a.m. ish is the first click. The next click is Tuesday morning, Wednesday, August 28th. The second click. The third click is the next swing high, which is Thursday morning. All right. So you've got 1 click, 2 clicks, 3 clicks. And what that does is it creates these Fibonacci extension tools. Now, the standard, most basic Fibonacci layout for Elliott Wave, I'm just going to give it to you. Besides the 0 and the 3 where you clicked, you want to see the 100 fib, you want to have the 200 fib, and I think you want to have the 1.618. If you only have 3 fibs just for a basic roadmap, that is reasonable. There is a lot more to this, but to keep this simple, after all, the name of my channel is Elliott Wave Made Simple, just go with these 3. And what you're going to know is when you get 5 waves down, followed by what you determine is a 3-wave correction, you're going to notice these fibs get interacted with. Okay, so the first one is the 100 fib. It typically acts as resistance. First, it acts as support, and then it acts as resistance. I say typically. There are no certainties in trading, but typically the 100. So you can see it bounced off of the 100 region on the way down, got contained by the 3.8. Let me make these brighter. By the 382 to 50% fib, which I typically think of as a wave 4. Although in this case, I think of that as an internal wave 4. In any case, it came down, thought about holding the 1618, but the selling was too strong. So it came to the next fib, which is the 200 fib. Then it bounced and got contained between the 236 and the 382, which I believe is a wave 4 of the correct wave 4 degree that goes with this one too. And then now we've made another low. We're coming down. So now, guess what? Just as I showed you the fibs that I put for these white fibs, wave 5 in white should also be composed of 5 waves. So what I did, now I'm going to drill in a little bit here so you can see it. I know a bunch of you guys are on phones. So what I've done here is simply these purple fibs. It's the same game. You grab the tool that gives you 3 clicks, trend-based fib extension tool. Click number 1 gives it the swing high. In this case, we believe that is the top of wave 4. 5 waves down gives you the second click. The next swing high gives you the third click. And now you've got these 3 Fibonacci levels in purple. Now I've done a little bit more than that because I'm using a ratio box down here, which is based off the size of wave 3 in relation to the size of wave 4. I won't get into that for this video, but that is what allowed me to put the additional extension of the fib setup for Elliott Wave Standard Impulse. I wanted to see what fib is in the middle of this box. It happens to be the 2382. And guess what? Because wave 3 extended to the 200 fib in white, it is reasonable to expect further extensions as the symmetry and the ratios tend to be somewhat consistent. I can't even say that with a straight face, but it's the point of, look, this is giving you a calculated guess. This is not a random guess. This is a calculated guess based on Fibonacci, Elliott Wave, and ratios. So for a wave 5, I'll not be surprised at all to see price come down here somewhere in this box, the low of which is 65. Just for reference, 65 is dead in the center, going back to our longer time frame simple chart, just based on a couple of key levels that have been on my chart for months and months, more than a year, actually. These lows have been on here much longer than a year. So the point is, this is a reasonable target. And then I've got the micro stuff kind of supports that idea. So I'm short. I continue to be short. Look, the line in the sand, let's give you some parameters now. So this was a parameter right here, but it got broken. So I don't want to see price, for the sake of my shorts, come back and get above that wick right there. Call it 70.77. Actually, that is exactly what that wick is. So that, I'm going to call that the ceiling. So yeah, this can come back up there for sure. If you missed all of this short action and you've got FOMO, don't. Give you a couple ideas. Now look, I don't want this video to be too long, so I'm just trying to keep this a little brief. But if you're looking for an entry because you missed a boat, it wouldn't be unreasonable, 68.82, to basically look for the 618 to 886 zone as an area that you typically see a reversal from. So all I'm going to do is clean this up a little bit, bring this box over. So if you see price in the Asia or Euro session, get up into this box. It's a reasonable place to take a short. And ultimately, there is always a chance that listen, I'm only giving you probabilities. Anything can happen, okay? So the best thing you can do is work with some parameters. So this is one parameter, 70.77. The next one is, call it 70 cents higher, okay? And that's 71.46. That same level that has already been back tested, and now we've come down, and we've also gotten below this level. So I don't really want to see it get much above this level right here. So if you see it up in here, you could take a short, and the stop is near. If you want to play a tight stop, you put your stop just above 70.77. If you want to play it a little looser, you go real small size with one position here. And if it keeps coming, if you want to be conservative, you take it off. But what I would do, now I'm already fairly decently positioned short from a couple of dollars higher. So I'm not really, over here somewhere. So I'm not necessarily interested in trying to get cute in here. But if price did come all the way back up into here, I would consider adding to my short position if it did come all the way back up through here. But if I didn't have a position, what I would do is stay really small, add one position, whatever that means for you, maybe 0.5% of your trading account, and then add another 0.5% of your trading account if it gets up into this area. So now you're in for 1% short. And then if it comes all the way back up and tries to grab some of this liquidity that over here from yesterday morning, if it wants to come all the way back up into here and grab that, you could add another 0.5%, giving you a total of 1.5% of your trading account exposure to short. And I think the target is down here, roughly 65.60 or lower. Okay, so that's the deal on crude. There you go. So those are your parameters. This is your target. You know what's going on. All right, now let's switch over to silver. Silver, extremely frustrating. Yeah, this is a 6-hour chart. Now, similar to the exercise that we just did in crude oil, I'm going to apply kind of the same idea to silver here. I think this is moving lower correctively. So all I'm trying to do on any of these dips is add to my longs. And each time there's a setup, this is the third setup to the long side. I mean, I'm talking swing trade here. I'm not talking scalp. I'm talking silver futures swing trade. And again, if you're trading Forex and some other instrument, pay attention to the structure because that's what I'm trading. I'm viewing this as 3 down into this area right down here. And then a bounce, which could be considered 5 waves. I'm going to call it 5 waves. And actually, let me just throw the labels on here. I'm not going to get all into the weeds for the purposes of this video. It's not unreasonable to consider this a 5-wave move up off of a target area, which is the 618 of this move down, which I'm viewing as a larger A, B, C. You got to go back in time and watch my other videos if you want to understand what I'm talking about there. So you got basically 5 up to here, 3 down, and then a nano 5 up, and a potential 3 down, potential A, B, C. Potential could also be an A wave, could get a B, and then it comes lower. But all I'm doing is adding another position at each time I believe it hits a support level. I add it again here. I add it again here. So what is the point of all this? Well, this is holding the 618 of this local move up. This is a standard area reasonable to look for a bounce. Well, we got a bounce. And then one of the clues that we look at when we're using Elliott wave are two things: fibs and structure of price. So I've just given you the structure of price on this 6-hour chart, which is we had 5 up to here, potential 3-wave down. That's the holy grail of Elliott wave. So we add to our longs or go long. You can go long it on any of these pullbacks if you're scalping. And then now we have potentially an ABC down into support. So the next clue is all of this stuff checks out on this chart. So the next clue is, what is the structure of this internal price? Well, I can't see that because I'm on a 6-hour chart here. So let's hop down into the silver chart, which, gosh, it looks like somebody's already been doing some analysis here. So this is the bottom of that larger 3-wave correction I just showed you. And then this is potentially, now this is where it gets, unfortunately, it's just not that clear. I like it when the market is clear. Silver has had a bunch of moments that I have felt very certain and clear. I had clarity about the parameters. Because of this action right in here, it did come up exactly to my target. By the way, see this big green arrow? I put that on there this morning. Or maybe it was, yeah, was it late last night? Or maybe it was this, I think it was this morning. I put this arrow on there when price was not anywhere near. Price was like way down here because I got up early this morning. I was up at like 5:30. So right around here, I started saying this arrow is my target for right up into this zone right up here. And that is exactly what happened. Now, if you had been in the Professor's Club, you would have gotten that alert. You would have been able to decide for yourself whether to take the long or not. I'm in the club. If you're not in the Professor Trades group, I highly recommend it. This is a perfect little spot to plug this because so many charts this week, guys are just killing it. They're killing it. Professors putting out charts, 3, 4, 5 charts throughout the day. Actionable charts with actionable levels, saying if you see price come up in the air short, if you see price come down in this area long, you decide where your stops are. You decide your own risk management, but he's guiding the way and he's doing it incredibly well, highly consistent, total pro. It's the mindset too. Less than $1 a day. I can't recommend it anymore. Also, you're getting me in there with some Elliott wave stuff, which is good for the runners. Armando is a scalper. If you're looking to grab short-term gains almost on a daily basis, although Friday is not so much, Monday, Tuesday, Wednesday, Thursday, especially Tuesday, Wednesday, Thursday, that window tends to be better. Come into the club, less than $1 a day. Try it for a week at less than $1 a day. Commit to just 7 days. Check it out. You're going to get more analysis. You're going to get better trades, more analysis. You're going to get guidance. You're going to get advice on the mindset. Anyway, I can't help myself but promote Armando because he's that good. So anyway, back to my chart. You would have seen this chart had you been in the club, and you would have known exactly what I was doing. So it came up, but here's the part I don't love. It came up very beautifully into this target for a wave 3. And it even came down in 3 waves as a wave 4. Then it started coming back up and poked above it, which I loved. But I want to see a wave 5 come up higher than this. I have a ratio box that was showing wave 5 like up in here, which coincides with this zone, this sort of zone right in through here, which goes back in time. Call it 2891. So it did come down perfectly in what you would think of as a wave 4. I mean, just ideal. And it did it in 3 waves. You can't really see that, but you're going to have to trust me. That's 3 waves down here. 1, 2, 3 for a wave 4 in the blue target box for a wave 4. Then it bounced, but it did not get escape velocity to create a proper wave 5. But I've looked at the internal structure. You could argue this is 5 waves. It did make a new high. Then it came back down correctively. Now it's coming up, but my God, this is not clear. Because now what I'm thinking is if this is 5 up, then it could come back down into this zone. But here's the thing. It already gave a 3-wave correction. Well, where did this 3 reach? Well, you can just see already it exceeded the 3 282 fib. You can just tell that by eye. Well, and for a wave 2 in metals under a bull market, this is important. I've been messing around with silver seriously since 2009. I've been trading it for 5 years, basically. But I've been messing around with buying silver, trading physical silver since 2009. I've been watching this instrument for all of those years. Once it gets into bull mode in earnest, it is going to give you almost no opportunity to jump on the boat. That's why I'm spending so much time on silver, because I've seen it. I'm familiar with the instrument. Once it lights off, it is going to rip your face off with a rally, and you're not going to be able to get on the train. And then I promise you, as soon as you surrender and say, well, gosh, okay, I give in, I'm going to go long here, I promise you that is the moment you're going to get either a wave 2 or a wave 4. And then you're going to cry because you over leveraged from the FOMO, that because you missed the trade. So you're going to go too big because in your imagination you think you have to make up for something. Then it's going to go against you. And then right when you can't take the pain anymore and you say, okay, I promise, dear God, I'll never trade silver again. Just let me, okay, I'm done. I get out of the trade. I took a huge loss. And that's the bottom of wave 4. And then now you're out of the trade, and now it rips in a wave 5. And the wave 5 gets you to over $50 an ounce, and you missed almost the whole thing because you were screwing around with your emotions. So I'm familiar with silver. What I'm telling you, now let's go back to the chart, is it is not unreasonable, if this is a 5-wave move, that this is all the correction you're going to get. It is possible that that is what has just happened. Am I predicting that? No, I'm not doing predictions. I'm doing parameters. So for now, what I'm going to do is I'm going to get rid of that 886 down there. And I'm thinking a better question might be over here. If it wants to come down, if the Euro session sells it down, let's see. Now, this is still a decent parameter here, but I actually think if it can't even hold the 618 after all of this mess, if it's going to come all the way back down here, 1, 2, 3. I mean, I suppose this could be an A wave. Now I'm getting a little bit in the weeds. If this is 5 up, and let's say that's not deep enough, because what I do also know is the 382 is not an unusual target for an A wave. 28635. All I'm doing is looking for my yellow A equals C template, which I will explain very, very briefly right now. So when you get an A wave, the first thing that I like to look for is the C wave being equal size of the A wave. So if this is an A wave down into this 382 region, and this is giving us a B wave, then the next thing that happens will be a C wave. The length of A often equals the length of C, or I really should say the length of C often equals the length of A. So if this has topped in a B wave, it would be reasonable to look for 2837, because that's the 100 fib of the length of 1A as measured from the top of the B wave. Another thing that we know, and maybe you know this by now if you've been watching enough of my videos, is that a wave C is made up a great majority of the time in 5 waves. So guess what? It's the same exact 5-wave proportions that we would look for anytime we're looking for a 5-wave, whether it's a nano C wave or a ginormous multi-decade move. Not kidding. Maybe you think I'm sarcastic talking about a multi-decade move, but that's the way Elliott wave works. So if this is a 1-2 setup that just already happened for a C wave, 2862, I'm going to go here, and guess what? I'm going to go grab my template, the standard Elliott wave that I just showed you. So if this is going to give you a C wave down, it may look something like this. It could extend 2, 3. If it needs to make it, well, it doesn't need to do anything because it's price, it's market, it's a non-linear complex environment. So it doesn't need to do anything. It can do whatever it wants. But what I like to do is try to discern what is most likely. So given my experience with C waves, it's going to hit at least a 100. Great majority of the time, it hits at least 100. So this wave 3 could extend. Okay, so now that I've really talked too much and given you too many variables. What do I think is most likely? That is precisely the problem with silver right now. This is kind of messy. I really don't have an edge other than we are still in a bullish structure. Even if it comes all the way down here, I'm still bullish. Even if it comes all the way, I know you think I'm making this up now. Even if it comes all the way down into here, all the way down into here, I'm still going to consider that bullish. It's going to take a massive move lower through all of this over here before, like really this low. So what is that low right there? 26.94. Below 27, man. I don't want to see below 27. So again, back to my messy chart now. Hopefully you've learned a few things about Elliott wave. One way to think of this too is to get rid of the noise, get rid of all the fibs, or get rid of most of them. Just clean up the chart and just leave those on there as a reminder of what might be. You know, of course, because I'm already long and I've already added multiple times, I like the idea. Okay, what would be the idea if this is wave one and this is wave two? Well, guess what? No big deal. We know how to measure for 5 waves, right? Because I've already done it 3 times in this video, right? This is going to be the 4th. So if this is really the top of wave one, if this is really all the stingy pullback you get, 28.45, if it's going to be that stingy, now I'm going to go turn on the same exact template. This is just a starting point template. If this is what's going on, if this is a wave 1, 2, then wave 3 projects all the way up there to almost 30. So really, and I like a lot very much how this is coinciding with that level that I've drawn from the past. And it also happens to be a remnant of another measurement, but still, it's still a fib. Still a fib. So there is some confluence right in this area. Let me keep looking to the left. Yeah, see, look at that. This level, this would make perfect sense. If this is going to go higher, make a new high here, and then keep coming. This is a level. So to keep it conservative, you want to see above, really, you want to see above 29.11. You want to see back above this level. Okay. You want to see back above this level before you see anything break 28.21. So I'm going to do like this. I'm going to move this ceiling up to that 100 fib. So I'm going to view that 100 fib as the ceiling, 29.11, the floor, 28.21. So you have basically a 90-cent ceiling to floor height. And the details, the nano parameters that we want to see for bulls is you want to see this get up here and make a new high above this level, and you want to see it make it at least to 29.11 at a minimum to really give some more confidence that this low is the low. Okay. Now, I know I give you a lot of variables. Maybe your head is spinning. The parameters are good. The structure is going to inform us. So by the time the morning rolls around, look, move my timer over here. So tomorrow morning is right at the end. By the time I start looking at the chart, I'm looking over here. So I'm going to be looking for price to either be up here in the morning or be down here in the morning, one or the other. So there you go. Listen, always remember to size your trades in a manner that you can take the heat. Size is key. Always remember to size down your trades so you can take the heat. Always. And no matter what you do, remember, please, when it comes to futures, don't get killed. I mean, honestly, that is step one. If you're trading futures, stay small. Stay small. And you can do this for years if you stay small. All right. Thanks a lot for watching, guys. I'll see you. Hey, drop a like, drop a comment. If you're getting value here and you want to keep up, you're not in the club, and you at least want to get some value on Sundays and on Wednesdays, go ahead and subscribe. You'll see my videos every Sunday, every Wednesday, mostly silver, gold, NASDAQ. What else? Oh, gosh, I don't know. Look at the other videos. I trade a bunch of different things depending on where I'm focused. So right now, I'm also trading a currency pair, GJ. Anyway, Thanks for following. Thanks for liking. Thanks for subscribing. Also, a couple of you guys have bought me coffee, man. It's so cool. I appreciate it. It encouraged me to keep making these videos. There's a link down below to buy me a coffee. Simple. What's a coffee? $2.50, $5. Some people have done crazy things and been very generous. I love my coffee. It just encourages me. That's all. It just encourages me to keep making these videos and keep sharing what I know about Elliott Wave after my 10,000 hour journey into Elliott Wave education. I'm sharing it with you now for free 99. All right. Thanks for watching. See ya. Bye-bye.